2 dividend stocks with potential to provide increasing retirement income. If your goal as an investor is to develop a stable income stream for your retirement years, you should search for stocks to hold for the long term, with an emphasis on their ability to provide income. Buying dividend growth equities with a history of increasing payouts each year is one method to reach this goal. These firms are usually well established and can provide your portfolio with both stability and development. With these advantages in mind, we've chosen 2 stocks that potentially provide both growth and consistent income for any portfolio. Pfizer. Pfizer, the world's largest pharmaceutical company, is in a strong position to build on its vaccine success and develop a long-term revenue stream from its vaccinations and any possible boosters, all of which would help fuel dividend growth. Based in New York City, Pfizer now pays a quarterly dividend of 39 cents per share. Over the last 5 years, this has increased by more than 6% every year. However, if the company's COVID-19 vaccine becomes a standard part of booster doses and future additional forms of inoculations, the escalation rate might drop dramatically. Pfizer's mRNA vaccine appears capable of taking on additional COVID-19 variations, according to company executives led by Chief Executive Albert Bourla. As a result, the money made from inoculating world populations against COVID-19 is expected to last long after the epidemic has passed. Pfizer now expects $33.5 billion in sales from its COVID-19 vaccine this year, as numerous nations approve booster shots and the vaccine shows safe for children under the age of 12, according to preliminary studies. The drug maker had originally forecasted $26 billion in vaccine sales for the year. The increased revision indicates that demand for the vaccines, which Pfizer sells in collaboration with BioNTech, is increasing as governments battle fresh outbreaks caused by the Delta virus type. The 2 companies had contracts for 2.1 billion doses through mid-July, and will create 3 billion shots by the end of the year, after delivering 1 billion doses of the 2-shot regimen. According to Bloomberg estimates, if Pfizer's sales expectations are satisfied, the vaccine will surpass bellwethers like AbbVie's Humira immunosuppressive therapy and Merck's cancer fighter Keytruda to become the highest-ranking blockbuster medicine. Pfizer's stock has gained about 17% this year, yielding 3.55% on an annual basis. Lowe's. Lowe's, a home improvement behemoth, is another good option for income-seeking investors. This year, the No. 2 home retailer has outperformed the broader market, owing to the stay-at-home climate, which has motivated many Americans to invest more money on their houses. As work from home becomes more of a norm after the epidemic, analysts predict this tendency to continue as more people relocate out of big cities and into the less crowded suburbs. This de-urbanization, along with persistently low borrowing rates and enormous savings accrued by Americans during the pandemic, signal to sustained increases for home improvement equities. Lowe's announced better-than-expected profitability and improved its sales estimate in August, owing to increased business from home builders. The retailer from North Carolina said it expects $92 billion in revenue this year, up from an earlier prediction of $86 billion. Lowe's has rewarded investors with a massive dividend increase this year as sales have soared. In May, it increased its quarterly dividend by 33% to 80 cents per share. Lowe's continues in an excellent position to increase its dividend payout, with an annual dividend yield of 1.52%, thanks to ongoing business strength, its growth trajectory, and strong cash flow production. Conclusion: buying dividend growth stocks should be a key part of your retirement investment strategy. Increased payouts over time will help to grow wealth while also offering a hedge against economic unpredictability. Subscribe to our channel for more financial news and analysis.